banking lead and regional manager, Asia and Pacific in the Financial Industries Group at the IFC. So as we all know, support for MSMEs is vital today. We should tackle the elephant in the room. So the over-talked and overhyped trade finance gap. We understand at TFG that this is set to double over the next year. And hopefully, Qamar, you can actually shed some light on this. So government and multilateral intervention has been critical in mitigating the economic impacts of the pandemic, particularly in emerging and developing markets. It's interesting to hear some of the initiatives, and I look forward to you shedding some light on what this actually means for the MSME market and what the IFC's involvement will be in facilitating access to trade finance post-pandemic. So with that, I would like to hand over to you to give your presentation and outline where that support will come from.
Thank you, Mark, and it's a pleasure to be here. First of all, thank you so much, TXF, for having me here. And it's a very pertinent topic, both in terms of the time of the day and also what we do at IFC and the World Bank Group. Inclusion, as you know, is at the heart of our agenda in terms of development finance. So what I'll try to cover today on the next slide, you see the framework of what I plan to cover today. If you can please flip to the next slide. I've always maintained, I've spoken at different trade finance and supply chain events, and I've always maintained it's a 5-corner model, which needs to come together to solve an MSME access to finance problem through value chain and trade finance. So what it means is the MSMEs really are the beneficiaries, then the large corporates, what role they play, what role the governments play, what role do the financial institutions and the DFIs play, and then what role do the technology and the digital play. And then I'll transition into talking about some of the risk elements that are rampant in the MSME space. Anyways they are, but now they are much more magnified owing to COVID. And then I'll close off on a few resources that we've created, as well as a new knowledge guide that we have recently launched. So let me start off by kind of putting the context on the next slide, please. What really is the extent of the problem that we're dealing with right now? So even pre-COVID, the trade finance gap of $1.5 trillion, and I think it's increasing rapidly. And these are just fair estimates that we anticipate this gap to have doubled over the next few years, owing to the credit constraints, owing to the disruptions in the value chains that are taking place. So we are really looking at an expanding supply chain and the trade finance gap. And then I think trade flows, as we already know, have reduced, and 10% is really a conservative number. But we are seeing that rapidly go down. And on the other hand, while like there's a large trade finance gap and the trade flows are shrinking, the data quality and data availability of MSMEs, a lack of it doesn't really help. In addition to that, I think a number that you don't see on the slide, we anticipate the MSME finance gap for even just the formal enterprises across the globe is around $5.2 trillion. And we anticipate nearly 20% of it is actually locked up in the value chains and the trade finance. So if you really look at that space, that's another $1 trillion of gap that we're looking at. So the size of the problem is not small, I think, and we have to understand the magnitude of the issue we're dealing with, which has been multiplied because of COVID. And now on the right, you see, while you see 6 elements listed here, I'll bucket them in 3. I think what MSMEs have faced is one on their own value chain and working capital management. So loss of orders, disruptions in value chains, going into their own business, labor issues, their own shipment delays, and the working capital management issues. And then on the left, at the bottom, you see more the financial issues in terms of cash flow drains, expenses, unable to live up to the fixed costs that they are managing, as well as the credit profile has worsened, and the financial institutions are no longer interested in supporting to the extent they need it. So in many ways, the MSMEs are quite badly hit in this whole pandemic, and it's already they were quite constrained, and it's I think multiplied due to COVID. Now, if we can flip to the next slide, you will. I'll start off by what role can the large corporates play? And that was one of the questions, and that was raised as per the topic of the discussion today. So the way I've bucketed it is in, again, four categories. So one, we see that the large companies, they need to create, an inclusive environment where they get the MSMEs into their value chains, digitize those value chains, and have a systematic way of getting them participated in their value chain. It's no longer about the top 20% get the focus and the rest 80% get ignored. I think it needs to be much more inclusive in terms of their focus, and actually not just helping them, through that, but also digitizing their own internal processes, because many of the large companies don't have technology at the heart of their value chain management. The second bucket that you see is direct support, and it can be in risk mitigation, it can be in terms of liquidity flows, it can be in terms of drawing down on their available credit lines. So they can play a much more, maybe letters of comfort are no longer enough, I think, in this kind of an environment. So they do need to move a step further in terms of risk managing their value chain, so the financial institutions get much more interested in supporting them. The third category is around training and capacity building of the MSMEs. I've seen corporates. I was with a corporate in a bank in Brazil that they have actually a shelf space organization and a checkout program. They help MSMEs understand how to organize their retail checkouts, retail shelf spacing. So I think they need to do much more than just provide get procurement and suppliers sorted, but much more building capacity of the value chain. And then I think one of the areas that we feel growing is making sure they have inclusive value chain and sustainable value chains in terms of the climate agenda, as well as the including women entrepreneurs and some of the underserved segments. So much more responsible supply chain finance. And I know it's been discussed earlier in the discussions. And then lastly, I think there is a convening power some of the large companies have, much more than anybody else. And they have that convening power to influence the banks, the regulators, industry associations, supply chain players. So there is a key role some of the large companies, especially in the markets, developing markets, can play. Now, let me switch to further down. Let me go to the third corner, which talks about how, if we can flip the slide, please. Yeah. So in terms of the regulators, now MSME finance, as we have studied nearly 1,400 measures taken across 140 countries during the pandemic over the last 6 to 8 months. And we have seen that, a lot of the regulatory initiatives taken by regulators has been around keeping the liquidity and the credit flowing to the most affected and vulnerable sectors, that is the small income household and MSMEs. So that's been at the heart of the regulatory interventions. But when we saw the range, I mean, there are on average about 70 to 80 different measures in different categories, but we can really pick up the top 6 that have featured in most of the responses. One is the credit moratoriums, then classification, relaxations. Then we look at the supporting through restructuring of the loans, injecting liquidity, releasing and like capital relief and capital reserve relaxations, as well as interest rate and tax exemptions. So these have been the top 6 reliefs that the government and the regulators have provided in different countries. Now the impact and the extent to which it helped, is differing in different countries, because it's not always that you have a measure that is actually adopted by the market and actually known by the market. So I think it has a different level of impact when we study markets across the world. Now, let me move to the next corner of the MSME finance for supply chain and trade finance. Can we flip the slide, please? So here is where the technology comes in, and we are seeing that digitization is helping. And I don't think I need to say much on this. I think we all have realized how digitization is no longer a luxury. It's a necessity, and it's not no longer even just a necessity. It's an emergency that you have to really undertake digitization initiatives. How it helps: lowering entry barriers, access to markets that conventionally you will not have, having much more lower cost, creating data trails that can be used from the industry and the value chain play, and then wider inclusion. So there are obvious benefits to digitization, and this is being embraced much more rapidly than it was before COVID. Now, going to the next slide, I'd like to highlight what are some of the risk issues, and this has been discussed. We have worked in many markets in MSME finance pre-COVID, during COVID, and of course, we are committed post-COVID, and we are seeing some of the key risk issues that are coming up quite regularly. I think one is really obvious: demand and supply side constraints. So trade flows reductions, risk appetite among lenders is going down. The other thing we have realized, COVID-19 has not impacted every country, every region, every sector equally. So many of the sectors have actually benefited. Some of the sectors have really been punished, and some of the sectors have been able to sustain themselves. So, and again, across countries and regions, it's different. And of course, I've already talked about data. And now, what are some of the measures that can be used? Data leveraging, also leveraging trade corridors. Is there an Africa-China corridor? Are there specific corridors that you can plug into, rather than really looking at a holistic picture? Can we use specific data that large corporates are custodians of for doing MSME finance, and then accessing digitized like sales tax data, like it's been quite successful in India, using of new models, AI, robotics. I'm sure it's been discussed in the event, and also some of the tools that we can leverage in terms of detecting some of the frauds and credit and compliance issues, KYC issues that exist. So these are the top 6 areas from a risk mitigation standpoint that can be considered. As we go forward, we are seeing industry take some systematic measures. One are specific credit enhancements, such as credit guarantees. So many of the credit guarantees around the world have increased the credit coverage. They've increased new products. So I think that's quite conventional, but to what extent it helps, especially if your credit guarantee scheme is not portfolio managed, is questionable, but I think it is certainly an area that is helping. Then risk participation, I think a lot of large companies in some markets have come forward, banks have come forward and created structured programs for MSME finance. So that is helping, but not as much as it should be. Then there are new asset classes, securitization, structured trade, supply chain finance products, as well as collaboration amongst lenders. And it's not just about just competing with other lenders in the market. It's about co-sharing information and creating a collective win. That's some of the initiatives we are seeing being taken across the world. So going forward, I'll start to kind of move towards the close of this session. And of course, I think I'm always here to answer any questions post the event as well. But I'd like to point towards 2-3 things. I think one is on the next slide, you will see that we, at IFC, can we flip the slide, please? I think we have been studying at IFC different, trends and models that, are unfolding. And the way we see it for MSME finance, for enabling MSME finance, be it through trade finance, be it through supply chain finance, be it through other means, I think these are the 6 top trends we are seeing emerging across the markets. I think one is obvious: technology and digital embracing, but not just embracing digital, but actually making use of it through more advanced tools. Fintech collaboration, just to give you an example, we at IFC, we had collaborated with Singapore Monetary Authority and created a platform which is called EPIX, which is a fintech collaboration space for FIs and for fintechs to fintechs to collaborate and test new solutions, and with a specific problem statement. So we are seeing a lot of traffic there, and banks and fintechs are looking to collaborate much more because that's a plug and play, which is what's needed these days. The third is capacity building. For especially financial institutions, it's not enough to just do banking and to offer financial services. Providing technical support. In some countries, we are even seeing financial institutions come forward and see how some of the SMEs can be repurposed. So it's no longer just about training, it's about really defining their own niche and defining their new markets. So capacity building is another area that's coming much more strong. Transaction banking, over the next couple of years, the risk appetite will remain relatively muted. So how do you sustain revenues? So transaction banking revenues and new products, both on fee and float income generation products need to be generated. Then supply chain finance, I think, is an obvious one because it gives you A, an efficient means, and B, a risk mitigated mean. And of course, the risk management, the NPL resolution, the overall, a lot of NPLs right now in many of the markets are masked. We don't exactly know the size of the problem we're dealing with. So there will need to be a risk assessment, financial stress testing, followed by resolution of some of the NPL issues at country, at FI, and at the SME level. So these are the top 6 trends. I'll start closing. I know we just have 5 minutes left. So I'll quickly go through the next couple of slides. So we at IFC have been running a GTFP program. On the next slide, please, which talks about how we support through guaranteeing some of the trade transactions. We have done large volume of transaction, about 68,000 volume of about $66.5 billion. So that's one way to facilitate trade across markets, especially fragile markets. We also have been running, on the next slide, please. We've also been running a global trade supply chain finance program, which we launched in 2012. So far, we've done nearly $3 billion and supported 1,000 suppliers across 14 countries. You see the ticket size highlights that we are really taking it to the MSMEs globally. And of course, we are committed to expanding this program. And we've also been running a large advisory program on supply chain finance, where we have supported financial institutions, governments, regulators. Within Asia only, we are running 8 programs. Globally, we're running about 22 programs on supporting supply chain finance, enabling trade and supply chain finance for MSMEs. And we see that as an area of growth. Just to conclude, I'd like to quickly launch our trade finance digital. Can we flip, please? I'd like to launch our technology and digitization in supply chain finance handbook that you will find. The link is here. It's also on social media, is also on our websites. So we have been studying how technology is shaping our supply chain finance, and this handbook is very useful. It builds on not just the market knowledge, but our own internal knowledge, as well as our experiences across different markets on enabling MSME finance through trade and supply chain solutions. So I'll stop here and head it over back to you, Mark. Thank you so much.
Thank you very much. That was a fantastic presentation. And just noting the time, just to finish off with a couple of quick questions. So just if you can let us know, in effect, how is IFC supporting the private sector directly? And also moving on, so I spoke in my introduction, you also touched upon it, the trade finance gap doubling. So can you just touch on what this is a result of? And also, inevitably, governments have promised billions of dollars going into this space. So in effect, what's gone wrong and how do we remedy that? So just over to you there.
Okay. So Mark, I think let me answer the first one. Of course, IFC and the World Bank has been committed. IFC had announced at the outset of COVID an $8 billion working capital facility, of which $2 billion has been drawn down across markets. So we have been supporting our clients in target markets, and that's combined with the World Bank program. So we are working at a sector and at the firm level. In addition to that, we have been holding market level education seminars and webinars for our clients. We've run over 200 webinars across the world for our clients in areas that are relevant, like risk, like MSME finance, like digital finance. So making sure our clients understand what the trends are. In terms of the trade gap, I mean, it's quite obvious in terms of how some of the procurement and supply chain disruptions have created absolutely gaps that didn't exist before. I mean, there is no magic to it, quite frankly. It's an estimate that we have, but seeing the trade flows across countries, regional trade flows, we are seeing it weakening significantly. So that's what we feel in terms of the trade finance gap that has been basically increasing. Now, on the role of the governments, there has been a lot of programs governments have rolled out. And like I said, the effectiveness of those programs is still to be seen in most markets. But I think what it has really done is made sure MSMEs can sustain through this process, this epidemic. And that has been coupled by DFI programs, banking programs. But the issue I see, the biggest issue I see right now, and especially fragile markets and markets where regulator is not strong, is that we don't know the size of the problem. So we will know the size of the problem once the moratoriums end. But having said that, I must commend the governments and the financial institutions and the regulators who have come forward and offered these solutions, because without which the problem it could have easily become a solvency crisis, which we would be, I believe, able to avoid.
Thank you very much. Thank you for a fantastic panel. I think we're out of time. So we'd just like to also thank TXF for a great opportunity to bring this to the fore today. Hopefully speak to everyone soon.
Thank you. Thank you.